Thanks very much. So I am a senior research fellow at the Cambridge Center for Alternative Finance. We've done a series of reports for the last 5 years looking at alternative finance and trying to set benchmarking kind of studies around the world, trying to understand alternative finance in its regional context. We do a lot of things, there we go, it works, on alternative finance, which I'm going to talk about today. We also do a lot on kind of alternative credit and payment systems and regulation and policy issues. So I'm going to focus today on the first one, but do go to our website and look more broadly. There's about 20 different reports you can download on these different issues, everything from regulation to blockchain to regional kind of benchmarking studies. And this is just a little bit of what we do. What I want to do today is go over some of the data that we've done here in Latin America. I want to look particularly at Mexico and Chile and look at the alternative finance industry within it. So I won't be looking at blockchain, and I'm not going to look at payment systems, although we will kind of as a panel be covering those sort of things. But I want to look very particularly at alternative finance. So both the kind of peer-to-peer lending part of that and also crowdfunding. And kind of tease out for you some of the issues about inclusion, but also hopefully just set the scene and kind of help you all understand what the landscape of alternative finance is in Chile and Mexico. The data is both survey-based and microtransaction-based. We've worked a lot with various partners, but today, in particular, with the IDB, who's been a great partner in Latin America, and I just want to both take a moment out to thank both the Banco Chile for this wonderful and really important kind of gathering, but also the IDB, Diego and Gabriela here, for being wonderful partners, not just from now, but over the years, who have really kind of helped us develop this database. This is just some of the policy reports. Again, all these are on the website. Some of our regional partners and some of the areas where we've been kind of doing benchmarking studies. So, what is financial inclusion? I think that's the first question to really ask. We might think about it in terms of who is receiving funding, right? The characteristics of the person. This might be, based on gender, based on ethnicity, based on income. These are kind of classic ways of kind of thinking about that. It also might be about, if we're talking about firm finance and small firm finance, it might be about the characteristics of the firm, that perhaps small firms are underfunded, perhaps particular sectors are underfunded. This depends on the country, right? What is included in kind of financial exclusion. And then, finally, I'd like to say it also, my background also, I'm also found in the Department of Geography, so put this one in context. But the third point I'd say is that inclusion can also be a geographic issue. And often in countries such as Chile, such as the UK, where the capital city is very strong, it often sucks in resources, it sucks in innovative firms, it sucks in funding, and there's often a sense that it's overrepresented in terms of finance. And so often there might be a regional dimension as well that we can tease out. So I'm going to look at these issues briefly in Latin America. Our data here doesn't allow us to say that much about actual inclusion, but then I'm going to turn to the UK, where I think we can tease out some of these questions, and then I would pass it over to you and to our panelists to see, to what extent we might think of these issues either being important within the context of Chile or not. So I'm going to take you through Latin America. This next few slides comes from a report we've done with the IDB, looking both at the scale of alternative finance in the Americas. This includes Latin America, Canada, and the US. And the US, of course, in these things, as we would expect, dominates kind of what's happening in the Americas. But what's happening in Latin America is very interesting. We saw increases last year in 2016, that's where the latest data is from, of over 200%. Now, the interesting thing also is the size of the market is very similar to Canada's, but the structure of the market is very different. The composition of the market in Canada is mostly about what we call non-investment forms of crowdfunding. This would be things like reward crowdfunding or donation-based crowdfunding, where you might fund an art project or a book or something, and people might kind of either give you money in return for the book or some streamed music or something, or you're just supporting a cause you believe in. It's interesting in Canada that that really dominates the market. What's happening in Latin America is very different, though. I think 70% of financing is dedicated to SMEs. And that's really, in different models, and I'll show you some of the different models, but that's really interesting, that it's so focused on SME financing. I have a block here. Let's see if this does it. Oh, for goodness sake. Hi, I'm having a problem with the computer here, if anyone can lend a hand. It's frozen. Anyhow, while he's doing that, I'll just say a few points about the next slide, which is, oh, thank you very much, which is, and now you get to see it as well, even better, who the big players are in Latin America. This has changed a bit. I think we were saying before that Chile was #1 in alternative finance. What we see with this later data is that Mexico has kind of leapfrogged Chile and actually is the market leader right now. The interesting thing is, in 2015, Mexico saw a big burst of activity, and a lot of people think it really was about regulation. We were talking about regulation earlier, and I'm sure we'll talk about it later as well. But providing appropriate regulatory structure gave a lot of certainty to the market, or reduced uncertainty, let's say, in the market, and actually encouraged kind of a much broader participation in the market. What we have here is something I want to talk about as well, that people have referred to all morning, but it's nice to actually see some data in it. And that is that large institutional investors, like the big banks, different hedge funds, different kind of parts of the more traditional finance industry, have been increasingly active in alternative finance. And so it's important to kind of be able to see that there's been a big increase in 15-16 there, depending on the different market. Now, these are different models that we might think about: consumer lending, which is peer-to-peer, and business lending, which is peer-to-peer, and then different types of crowdfunding. And what we have here is both lending in equity-based models, where a lot of small, more risky, small innovative firms are getting finances from, but also in real estate, which has become an increasingly popular model. We see in Latin America that peer-to-peer business lending is the biggest segment, and it's growing rapidly. But the fastest growing part of the market, the fastest growing model, is equity-based crowdfunding. This is high risk. There's not always a secondary market for these investments. There's often no guaranteed exit for these investments. So it's interesting that this higher risk part of the market is where we're seeing a lot of growth. We were saying in relationship to Canada that kind of donation, reward-based parts of crowdfunding are actually a much smaller part of the picture, and indeed, they're only 5% here. I want to hone in a bit more on these investment-based models. So again, as we can think about kind of finance for firms really being affected by this, particularly for small and medium enterprises. So again, if we think about inclusion, we might think about how that segment of the market, which is often underserved, is able to find alternative funding. 234 million to over 65,000 SMEs. So 98% of that total is from investment-based models. Much of it is from Chile and Mexico, and the top sectors are technology, business services, and manufacturing. And again, kind of we can think this through sectorally to think if these are sectors that actually are well represented, overrepresented, or indeed underrepresented in traditional financing. Looking at Mexico, we've seen tremendous growth in alternative finance. And so again, we're talking very explicitly about the crowdfunding and about peer-to-peer, and in particular, peer-to-peer business lending. Annual growth of over 700%. A lot of people saying that the growth was very much pushed by the introduction of the regulation, as I was saying earlier. 30% of that is attributed to institutional players. So again, that's very interesting to note if we think about the ways in which, we think about the future of alternative finance and the extent to which do the big banks and the new alternative finance players go into a future together, or are banks this old dinosaur that get eaten up by the new sector? I think it's the first. I think it's clearly they're already a big presence and probably will continue to be a presence. And then some information about kind of the particulars of the model. Almost 60% of applicants onboarded, 78% have successfully raised funds. So, some very positive figures kind of coming out of that. Chile is the second largest in Latin America here, with almost 100 million in investment funds for small and medium firms. Again, we've seen 100% growth. We've seen growth in institutional investors. We've seen 22% of applicants onboarded and 94% successfully raising funds. We went a little further into Mexico and Chile with a further study that we did. These are some of our partners who were involved in this. Looked very carefully at 19 partners, mostly from Mexico and some also from Chile. 72% were from peer-to-peer lending platforms, and then did a number of follow-on interviews. And what we see there, again, is this prevalence of small firms, which again, in terms of inclusion, you really want to think about. Does this actually signify something to us that this segment of the business community is underfunded and therefore turning to alternative finance? 75% were sole proprietors with a low level of turnover, relatively low, right? Less than $25,000 annual turnover, 2 to 3 employees. Many of them were in manufacturing in the clothing sector. A lot of them were raising just small amounts of money, between 1,000 and 5,000 K, and 83%, this is an interesting thing for us to think about again, in terms of the success of this sort of model, 83% were repeat borrowers. That's interesting. When we ask people what is attractive about this model, it's the speed of funding that outweighs everything else. The flexibility and the speed of these sort of models. 86% of borrowers said the speed of the funding round. 80% said better customer care, flexible terms, the fact that you can have a early repayment without penalty, these sort of things, gaining control over the business, become very important. If we look at invoice trading, a slightly different model there, we see a slightly different demographic. So again, the devil's in the detail, right? It's important to actually look at each model and see what it kind of tells us. So here in invoice trading, again, it's a way for people to take invoices and turn them into ready cash, right? To kind of collapse the time waiting for an invoice to be paid. We see a wider spread of turnovers, that 21% are between 25 and 50,000 annual turnover, but 21%, the same percentage, is 200 to 500K, so kind of, mid-sized firms. So here you see kind of almost a bifurcated data set where you clearly for very small firms this is an attractive model, but also for mid-sized firms it's an attractive model. So it's worthwhile kind of, and I can't do it all today in 30 minutes, but it is worthwhile, it is in our reports, to kind of look more carefully at what each model of alternative finance is telling us. In invoice trading, again, they tend to be larger amounts, looking for between 50 and 100K. 64% are repeat borrowers and had used this in the past month. So clearly, this is an interesting statistic that certain firms are using this as a operating kind of mechanism to get them through kind of difficult times. So that's really interesting. Over 60% had used it more than 5 times. Now, our Latin American data on Mexico and Chile doesn't have a lot of our indicators about inclusion that we might want, but it does have the size of the firm, what sector they're doing, but also gender. And of course, gender is a classic kind of way to look at kind of exclusion to finance. And it's really interesting not to look at gender overall. I don't think that actually tells us anything, but to break it down again into the different models. If you look at non-investment, kind of reward-based and donation-based models on the bottom line here, you see women make up 43% of the fundraisers. But when you go to peer-to-peer lending, it's a much smaller percent, 35%. Invoice trading, 21% of fundraisers. You look at equity crowdfunding, and it's 0%. There were no female applicants. So, really important to kind of look that through and understand the different models. I'm going to turn now to the UK, because I think it's a well-developed, or more well-developed, alternative finance market, and I think we can see, get certain clues about financial inclusion that perhaps are not in the Latin American data yet. Just to give you a sense of the market, still growing very rapidly. Debt-based models account for almost 90% of the market, equity for about another 8.5%, and then non-investment relatively small at about 2%. I thought you might be very interested in this model actually comparing bank lending and alternative finance lending. Because again, it's very difficult to really get a sense when we're throwing these numbers around about the extent to which this is posing a challenge to traditional finance. So if you look here at the top, we see that's Bank of England business lending, total amount from in billions over time. That's from 2012 to 16. Down here, at the very bottom, we have peer-to-peer business lending, small loans from the BBA, the British Banking Association, and new loans to SMEs from the BBA. So if you look at peer-to-peer lending as a proportion of bank lending, you'll see it actually has increased rapidly to be about 6.5%. If we dig down a bit deeper and compare it to small businesses, new loans to small businesses, we see alternative finance comprising about 15% of that. So now, you know, in a narrower sense, if you're looking at those new loans to small businesses, you can start to see where alternative finance actually is starting to affect the market. So I think that's a very important thing for us to think about. If you look at equity-based crowdfunding as a proportion of total seed and venture capital, and I think that's the right thing to do, that we actually really shouldn't be comparing this to banks. This is more appropriate to be comparing it to venture capital. But if you look at equity as a proportion of VC kind of equity funding in the UK over that period, you see that by 2016, again, it's actually really making its mark. So I think we have to be quite careful about the claims we're making and be quite specific about the ways in which we're making it, right? So I think if you dig down here, you know, you start to see kind of comparisons that make a lot of sense. Another way to think about inclusion is age. Often we think of the young as being excluded from different financial models, and we've talked a lot today about the ways in which, you know, we might actually, that alternative finance might be a model that actually is much more inclusive for different kind of millennials. And we see here, again, it depends on the model, that the idea that older investors have been left out of alternative finance, I think, is not correct. So again, if we're talking more generally about fintech, we might be able to say that. But certainly as investors in these different models, they have very much kind of been part of the picture. So 57% of peer-to-peer business lending in 2016 was done by those over 55. So again, we need to be quite careful of the claims we're making because the devil is in the detail. Peer-to-peer consumer lending in 2014, 66% over 55, 55% 2 years later. When we get to the equity-based crowdfunding, this is the more risky kind of VC type, venture capital type models, we start to see the under 35s become a bigger part of the picture. So again, interesting to think about. Funder income, that also is an important way we might think about financial inclusion. There's lots of ways in which we might look at the extension of credit in terms of income, and I don't have that data with me, but certainly in the UK, it suggests that actually we do have a lot of low-income families included in a way that they have not been kind of by the banks. This model here, if we talk about, is about funder income, funder, not fundraiser, so it's funder income, who is putting up the money for these models. And again, it's kind of interesting to see that people with less than 15,000, that's the dark red here, are not absent from this. It's a bit confusing because I think a lot of retirees are with perhaps low income but higher wealth are kind of using these models. So I'm slightly wary about the data, but certainly it presents kind of a spread of different income groups. And although the 50 to 100,000 slightly higher represented than the other ones, actually it is quite a spread, a surprising spread by income. Going back to gender, again, it depends on the model. If we look at the top two are the crowd donation-based, non-investment-based models, and we see, we see that female investors make up, 55, 65, 40%. Peer-to-peer lending, kind of less. In 2016, it was 35% peer-to-peer consumer lending, and peer-to-peer business lending, even less at 16%. Equity crowdfunding in 2016 was 13%. I put on the side here because, again, I want to remind you that perhaps the right comparator is the venture capital industry rather than the banking industry here. But the comparison within venture capital in 2016, women only received in the UK 2.19% of total VC funding. So again, that might suggest to us that there's a real underrepresentation here and that perhaps some of these equity models are able to address that to some extent, right? This is venture capital, just to show how biased venture capital is here. That's percent of deal count, which is about 4.6%, and it's about 2.2% or something for the deal value. One thing we're not really able to say about gender in the UK is that there have been fewer women receiving loans. What we do know is that they're asked for more collateral, have higher interest rates, and they're refused more frequently. So again, we have to be quite careful how we frame this. Finally, I want to say, as I was saying in the beginning, that we also might think regionally of inclusion, that capital cities in many countries often kind of are overrepresented in terms of funding and capital. This is the geography of UK equity-based crowdfunding, and there's a real north-south divide, as you can see, with the south being overrepresented. I did a very simple calculation of location quotients to look at peer-to-peer business lending versus bank lending. And anywhere that's greater than 1 has kind of a higher concentration than you would expect, and anywhere under 1 would have a lower concentration. And the interesting thing here is that you get a much more complicated figure than the first one, that the north-south divide becomes much more complicated, with the northeast getting more funding, the northwest. So breaking down some of those regional biases that we tend to see in the UK. If you look at location quotients of equity crowdfunding versus venture capital funding, again, to look at the extent to which we might see higher levels of concentration, you tend to see what you might expect. Again, with the south kind of being overrepresented, but not quite in the way that that first map was, because Wales and the counties of Cornwall, kind of Devon, kind of rural counties in the southwest are also highly represented. So again, it suggests that we might actually see a bit of regional dispersion of these funds. So to conclude, I'd just like to say that, there are many ways we can think about financial inclusion. Low income, gender, ethnicity. We can also think about sectoral factors of the firm, or whether the size of the firm, but also there are these kind of geographic, regional kind of distribution of funds which, have a big effect on the regions. So I think there's a lot of potential in alternative finance to be more inclusive. The devil is in the detail. You know, we were talking about regulation, and we're going to talk about regulation later. I think a lot of that kind of depends on how much inclusion potential kind of gets teased out. I think those equity models in particular are very interesting and actually suggest that, you know, in that segment of the market, in those models, we actually do see alternative finance to be an important source of funding for young firms, for more innovative firms, underrepresented regions, and often regions with firms with female entrepreneurs. So that's it. We'll turn to a panel broader discussion on that, and thank you very much.